Hey, Allison is with you today on our channel. I will try to answer the most common question among beginners. Is it worth investing in cryptocurrencies and bitcoins? It can also be accompanied by questions: what are cryptocurrencies? Can cryptocurrencies be considered a serious investment, or is it just a kind of speculation? Before you answer yes or no to the first question, you first need to deal with the last two, which will lead you to the decision that is right for you. What is cryptocurrency? Cryptocurrency is a form of decentralized digital currency that can be used as a legitimate means of payment. For example, to pay off debts or buy goods and services. You can think of cryptocurrencies as a cross between a regular fiat currency, like the US dollar, and an asset like Amazon stock. There are already more than 2,000 different cryptocurrencies, among which the first and most famous is Bitcoin. Can cryptocurrencies be considered a serious investment? Or is it just pure speculation? Yes, cryptocurrencies can be a serious investment. However, there are some key differences between investing in cryptocurrencies and conventional investments. Here are some of them. Cryptocurrencies are completely digital, so they don't exist in the form of paper money. Cryptocurrency exchanges are not insured at the state level, for example, as they do with banks. If someone hacks into your account or your exchange closes, then the government is not obliged to refund your lost funds. Cryptocurrencies are decentralized. This means that they are not tied to any country or government agency, which allows cryptocurrency holders to transact without government oversight. On the one hand, this is an advantage, but on the other hand, there is no way for you to cancel unauthorized transactions. The history of volatility, instability, in cryptocurrency prices is not that long, and therefore traditional technical analysis may not work until the market itself matures. If you consider cryptocurrencies as an asset, then you are betting on the blockchain technology on which these digital currencies are built. However, fundamental analysis for cryptocurrencies will be very different from fundamental analysis of traditional assets. About myths of investing in cryptocurrencies. Now one might ask if traditional investors might consider adding cryptocurrencies to their investment portfolios. The answer will depend on the person you are asking. Here are some myths about investing in cryptocurrencies. 1. Warren Buffett believes that Bitcoin is a scam, and therefore I should not invest money in it. More recently, Warren Buffett likened Bitcoin to a button on his jacket, saying that Bitcoin is not really worth more. However, you can also talk about gold and the $100 bill that people use to trade. And yet Buffett invests in gold, doesn't he? On the other hand, Warren Buffett encourages people to only invest in things they know and understand well. He himself still uses a flip phone. He probably does not understand how cryptocurrencies can be used for the benefit of the non-bank population of the world, which with the help of smartphones could do just fine without banks. Even JP Morgan CEO Jamie Dimon, who called Bitcoin a scam back in 2017, did not abandon the introduction of digital currency into his company. And Buffett didn't say anything about the other 2,000 altcoins, which he probably doesn't mind. It seems that everyone now tends to think that cryptocurrencies, not just Bitcoin, are the future. Perhaps you should invest in them, although for this, you need to understand them well and be able to choose the right time to buy and sell coins. 2. I shouldn't invest in cryptocurrencies because the government or central bank doesn't support them. The whole point of cryptocurrencies is that they are assets that are not supported by the government. Imagine you have a business, money in the bank and a lot of property. And suddenly the government was overthrown, and the country begins to live by completely different rules and laws. Most likely, the new government will freeze your bank accounts, take away your property. These things will no longer belong to you because it is easy to grab them and say that they are no longer yours. What past wealth can you pass on to your children? Almost nothing. But if at least part of your money was then in bitcoins, which no government can reach, then it is another matter. Why invest in cryptocurrency? 1. Haters turn into active supporters. As we said, JP Morgan CEO Jamie Dimon called Bitcoin a scam back in 2017. However, his company is now creating its own cryptocurrency. Even the US government is beginning to realize that it will not be able to resist the global acceptance of cryptocurrencies and is currently actively looking for ways to regulate the crypto industry. 2. Cryptocurrencies are being accepted more and more. Every day we hear about new trading firms that accept cryptocurrencies such as Bitcoin for payment. Here are some examples. MasterCard creates a Bitcoin debit card. Fidelity is committed to offering crypto trading. The US is committed to optimal regulation in this industry. More and more people are learning about cryptocurrencies through the media and the internet. More and more women in the world are getting involved in the crypto industry. This is the half of the world's population that loves to spend money, and cryptocurrencies. Investing, the beginning. If you are looking to invest in cryptocurrencies, here are a few things to keep in mind. Find out how risk tolerant you are. The first thing you need to do is figure out how much you want to invest. Cryptocurrencies are volatile investments. This is still a relatively new market in which assets can make huge fluctuations in a day. Depending on their risk tolerance, the amount of investment may differ from person to person. Perhaps cryptocurrencies can make up 15% of the total amount of your investment portfolio. Learn. Before you start investing risking, you must have a good knowledge of the world of cryptocurrencies, as well as a good understanding of what each step means and what it is aimed at. What you need is general knowledge about cryptocurrencies, markets and trading, and not what marketers of certain coins are pushing. Choose a crypto exchange you can trust. Study the information about cryptocurrency exchanges and choose the one that you really should trust. This is a kind of research work that should lead you to certain conclusions about these platforms. These could be Coinbase, Binance, Kraken, and others. When it comes to exchanges, it is also worth resorting to some diversification because there are quite a few cases of hacks, and there are even cases where exchange owners die, taking passwords from wallets with them. Build a diversified portfolio. Next, you need to decide which cryptocurrency you will invest in. Although Bitcoin is one of the most well-known digital assets, there are over 2,000 cryptocurrencies, also known as altcoins, that are also worth exploring. The cryptocurrency market is similar to the dot-com era market. In the long term, some of these cryptocurrencies will do well, while others may disappear. Perhaps, along with the dying coin, you will have a couple of those tokens in your hands that will make you significantly rich in the long run.